The recent arrest of Ravi Narain, the former chief of the National Stock Exchange, for alleged money laundering is a stark reminder that governance structures still need nurturing. Markets have seen quite a few fallen heroes, and they offer lessons to investors and regulators. Let us have a brief look at some of them. How can we talk of market mishaps and not start with Shantilal Harshad Mehta? In the second quarter of 1992, the securities scandal roiled the markets. Till the scam broke, Mehta epitomized the rags to riches story. Someone who started as an outsider in Mumbai and became one of the leading market brokers in BSE. The 4,000 crore rupees scam involved Mehta taking advantage of loopholes in the banking system to manipulate the Bombay Stock Exchange. From a wave of followers flocking to his investment choices, Mehta's fall was stark. He was charged with over 70 criminal offences. The securities scandal brought about many changes in the financial regulatory system. Investors look up to market leaders for investment choices, but not all of them live up to expectations in terms of conduct. Ketan Parekh was one such figure. A protege of Harshad Mehta, he had learned trading from him. Ketan was revered as the Bombay Bull and was famous for picking stocks that turned to gold. Like Harshad Mehta, Parekh exploited loopholes in the market and faced allegations of insider trading and manipulating stock prices. He was also accused of misrepresentation of facts to borrow from banks. After Harshad Mehta, Ketan Parekh had markets on the boil and took regulations for a toss. Another billionaire market leader whose enviable rise was jaw-dropping and who eventually fell prey to his own ambition was Jignesh Shah. He revolutionized commodities trading in India when he set up the Multi-Commodity Exchange. Shah later launched the National Spot Exchange Limited or NSEL, the country's first electronic spot exchange for commodities, which eventually led to his downfall. Shah was arrested in a 5,600 crore rupee payment scam, where contracts were sold without collateral at NSEL. This marked the beginning of the fall of his empire, and Shah was forced to move out of everything that he had built. From market stakeholders, let us move to the regulators themselves. Chitra Ramakrishna was part of the core team that built the tech-driven National Stock Exchange of India, now a favorite of retail investors. Ramakrishna brought with her an understanding of debt markets to NSE. When she was appointed head of NSE in 2013, Ramakrishna was one of the rare women CEOs leading a bourse. But in 2015, reports emerged about the colocation scam, where select traders were allegedly given preferential access to data and trading systems through the colocation facility at the exchange. There were also allegations of money laundering. This has severely hurt the credibility of the exchange. Ramakrishna resigned from the NSE in late 2016, and earlier this year, the CBI took her into custody. Even as her case continues to dominate headlines, the Enforcement Directorate has arrested the former boss of NSE, Ravi Narain, in a money laundering case. Narain was the longest serving chief of the NSE from 1994 to 2013. Under Narain, NSE established an edge over BSE and facilitated large volumes of derivatives trading. But then, the shadows of the colocation case haunted him. Earlier this year, Narain was questioned by CBI for his role in the colocation scandal. Markets regulator SEBI has also imposed a penalty. Allegations of governance lapses during his tenure as NSE chief marred his image.
So I think, in my understanding, while the regulations have always been in place, however, while running the business operations, of more often than not, I think the people who are at the helm of the affairs have overstepped onto the regulations and possibly, I think, created something which has been found at a later date objectionable. In most of the situations which you have described from 1990 onwards till date, in most of the situations, I think one finds that while the regulator and the regulations they're both in place, the individuals who have run the business and the organizations, they probably overstepped on those regulations, which at a later date found out to be non-regulatory activity. Even if I think you are more vigilant with two eyes, I think the other stakeholders are having 20,000 eyes, and I think they are going to do much different than what we are doing as a regulator. In such kind of a situation, I think the system should be made more simple. In our environment, I think my experience of last 30-35 years, in order to curb the misuse of the system, the regulatory framework I think makes system more complicated. And more complicated the system is, it hurts both the parties. The regulator also get hurt, and at the same time I think the participant also get hurt.
With strict regulations in place, governance standards have improved by leaps and bounds over the years. But the effectiveness of these norms should be evaluated periodically to ensure there is no other Harshad Mehta.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.